The financial world is currently witnessing a phenomenon that defies every textbook ever written by a Nobel Prize-winning economist. If you look at the charts right now, in early 2026, gold isn't just climbing. It is behaving as if it has been launched out of a cannon. This isn't the healthy, rhythmic movement of a normal market doing normal market things. This is someone chugged a Four Loko and listened to a David Goggins podcast at 3 a.m. kind of move. To put this into perspective, for over 4 decades, gold was the boring sibling of the asset world, averaging a respectable but unexciting 6% to 12% annual return. It was the slow and steady asset class you bought for your grandmother. But over the last few years, leading into this chaotic 2026 landscape, gold has been averaging nearly 20% per year. Something is happening under the surface of the global economy that should not be happening in a stable, functioning world. It suggests one of two things. Either we are no longer living in a normal, functioning world, or we have dramatically underestimated the primitive emotional connection humans have with shiny rocks when the pillars of civilization start to creak. What makes this surge truly unsettling is the deafening silence from the experts. No one, not the high-frequency traders on Wall Street, not the Ivy League economists, and not even the lone wolf analysts on Reddit, can agree on why this is happening. Everyone has a theory, but no one has a definitive answer. Historically, gold is a hedge against inflation. When the price of eggs and gas goes up, gold follows. But we saw that theory break in 2021, when the Consumer Price Index, CPI, was doing its best impression of a meme coin after an Elon Musk tweet. Gold barely moved. It sat there, cold and indifferent. It is only recently, as we've crossed into 2026, that gold has found its second wind. This proves that while inflation is a chapter in the story, it isn't the protagonist. The real story is far scarier. It's the story of a world quietly, strategically, and desperately losing faith in the US dollar. For 80 years, the US dollar has been the undisputed king, the global reserve currency. It was the medium through which the world breathed, traded, and settled its debts. But recently, central banks across the globe have begun a process of de-dollarization that looks less like a formal exit and more like someone quietly deleting all their couple photos on Instagram before announcing a breakup. They aren't dumping the dollar in a way that triggers a global panic attack. They are diversifying. It's a tactical tiptoe out of the room so as not to wake the sleeping dragon. 20 years ago, central banks held over 70% of their foreign exchange reserves in dollars. Today, that share has plummeted to roughly 56%. That 14-point drop represents trillions of dollars of value shifting away from the American dream. And where is that money going? It isn't going to the euro, the yen, or the pound. It is flowing into gold. We are currently in the 3rd consecutive year where central banks have purchased over 1,000 tons of gold annually. To understand how insane that is, you have to realize that the previous decade's average was a mere 400 tons. In 2024 and 2025, we saw the highest gold buying years in human history, and 2026 shows no signs of a cooldown. Over 40% of central banks have openly admitted they plan to increase their gold holdings over the next decade. This isn't a retail fad. This is institutional anxiety. It is the sound of the world's biggest players getting nervous about US debt levels, which have spiraled into territories that math can no longer justify. Gold has become the monetary prenup, the safety plan for when the trust finally evaporates. The weirdest part of the 2026 economy is the dissonance of extremes. Usually, markets pick a lane. Either you have risk-on sentiment, where stocks and AI companies soar because everyone is optimistic, or you have risk-off sentiment, where gold rallies because everyone is terrified. Right now, we are seeing both. The S&P 500 is hitting all-time highs. AI stocks are being valued as if they've already replaced 90% of the workforce. And yet gold is also shattering records every week. We are living in a world where stocks are priced for a techno-utopia, gold is priced for a catastrophic collapse, and bonds are priced for utter confusion. It's like a girl telling you she's not looking for anything serious, while simultaneously asking for your love language and your mother's maiden name.
The signals are completely crossed.
This brings us to the why of 2026. Why gold, and why now? Gold is the only financial asset that is not someone else's liability. If you own a bond, you are relying on a government to pay you back. If you own a stock, you are relying on a CEO to not run the company into the ground. If you own a dollar, you are relying on the Federal Reserve to not print it into oblivion. But if you own a bar of gold, you are relying on nothing but the laws of physics and 5,000 years of human history. In a world of digital shadows and central bank digital currencies, CBDCs, that can be programmed or erased with a keystroke, gold represents the ultimate delete button for government overreach. As we look toward the remainder of 2026, the trend of preemptive positioning is accelerating. Central banks aren't reacting to a crisis that has already happened. They are hedging against a future they no longer trust. The narrative of the collapsing dollar that used to be reserved for silver-stacking doomsday preppers in basement apartments has moved into the boardrooms of the most powerful financial institutions on Earth. They see the writing on the wall. They see a U.S. debt to GDP ratio that looks like a vertical line. They see a world where trade is becoming fragmented and regional. And they see gold as the only neutral ground left on the map. What does this mean for the average person? It means the boring era of finance is officially dead. We are entering a period of high volatility, where the old rules, like the 60-40 portfolio, are being burned in the streets. Gold's move toward $5,000 an ounce isn't a cause for celebration. It's a warning light on the dashboard of the global economy. It tells us that the people with the most information and the most money are quietly moving toward the exits. They aren't shouting about it on the news because they need the exit to stay clear until they are through. Ultimately, gold is the mirror of our collective insecurity. When the mirror shows a straight-up vertical line, it's reflecting a world that is terrified of what happens when the music finally stops. Whether we are facing a great reset or just a messy transition to a multi-currency world, one thing is certain. The shiny rock that everyone tried to ignore for 40 years has once again become the most important thing in the room. It's not just an asset anymore. It's a vote of no confidence in the status quo. And as 2026 marches on, that vote is becoming a landslide. Keep your eyes on the central banks, because they are playing a game of musical chairs, and they've already claimed the last few seats.